Hello everybody, this is Thor Young with Bearable Traders, and I would like to do a recap for you today. In today's recap, I'd like to talk a little bit about partialing strategies. This has come up a lot in the comments section, and I certainly appreciate all you guys and gals putting in the comments there for me, making new suggestions. Feel free to continue doing that. I really like pulling comments out of the comments section for new instructionals, so that way I can really make these videos for what you guys are looking for and not just making them about stuff I want to talk about. So I want to talk to you about these partialing techniques and and a little bit about why and how you want to use some of them. So there's four main techniques that I like to think of, and obviously, this is my version of this, so you're going to hear this spoken about similarly and differently, I'm sure, in other categories. So basically, for me, it's you've got your scalp, you've got your long hold, which is basically a scalp. You just hold for a longer period of time. You've got your momentum play, and you've got your trend play. So a momentum play, let me define these real quick. A scalp is going to be a high velocity trade with a mid to large size, and you're going to go for a small amount of movement in the stock, and you're going to take the vast majority, if not all, of your position off in a single trade. So a scalp trade, for instance, would be something like, if you look here on my rad chart, it'd be something like this. You're getting in here on this short that I took here, and you're just looking for a breakdown to somewhere around 11.50. So you say, I'm getting in at 12.17. I want to make 45 cents out of this thing. So I'm going to take an entry here. It's going to go 40 cents, and then I'm going to get completely out. That would be a scalp trade. Now, a long hold scalp trade is very similar. It's just I don't call it a scalp because you're going to hold it for longer. But the concept of it is very much the same. Your target's just going to be a lot further away. So you're going to get in here low, and you're going to go down. You're going to say, I want my target to be something around $11. It's going to be a much longer hold where you're going to have to hold through pullbacks and such. So that's why I don't think of it as a scalp. But I also don't think of it as a trend play either, because in a trend play, you're going to add into your position at key levels. You're going to try and get yourself into better positions as the stock confirms what you're looking to do. So you're not just taking a single entry and then a single or maybe two exits. You're actually maybe taking multiple entries to actually build your position and then stop out. So for instance, on a trend play here, you might break down and then you would be doing an add. So I'm going to show you two different ones. One of them, I'm going to show you a momentum play. One of them, I'm going to show you a trend play. All right, so this was a momentum play on RAD that I attempted to turn into a trend play, but it was already so far sold down. It was like over 100% down already. So sold off in that period. So I was doing really, really well. But so you can see here the market opened and we actually looked pretty strong. It sold off through pre-market low. It held up. It looked pretty good. So I went ahead and took a long position, and my stop was going to be the loss of this level I had at 12.15. This level comes from right here. You can see we had a lot of support showing off of this level right here. Also, a lot of volume by price happened at that level. So that's what I liked about it. All right. Sorry. Let me scoot up here. So it went long here. Didn't go too heavy on the shares because whenever I go counter trend, when the pre-market trend is showing weak, but its setup looks strong, it's not an ideal setup for me. So I get a little lighter in the shares, and sure enough, it lost that level, and I got stopped out. But after it lost that level, it came back up here and it held the level, started using it as a resistance. The floor becomes the ceiling, if you will. And then it held up and really started getting held down by these averages, set up a really nice shoulder. So I went ahead and took a short here for a breakdown through pre-market, and certainly got that very nicely. So this is a momentum play. I saw a large bid sitting down below pre-market. I'm expecting the stock to drop rapidly, so I'm taking a single large position. My stop loss was the loss of the averages, actually the top wick of this candle. So 5-cent risk. Popped right down, got 10 cents really easy, really fast, and I took that off. I actually dropped 25% there just to make sure I was locked in well at the break, and then another 10%. And then I just took small partials down as we went all the way down to about 15, 20%, or sorry, actually it was about 10 or 15% here. So I tried to do an add when it rolled under the 50, and it still looked like it might break down, but eventually stopped out on it, and that's okay because Rite Aid's been slowly but surely ticking its way back up. So the next one we want to talk about, so that's really more of a momentum play. So and then I want to show you more. I'm a momentum trader, so almost all of my plays are basically momentum plays, and this is no different. Now, I will explain how a trend play would be different, but this is what we're looking at. So first off, ABT had great catalyst today. So I was looking for a strong open, and it certainly gave me one. I got a couple of entries here, all with profit, but eventually all stopped out at break even on remaining shares. And I could just tell I wasn't really getting the continuation I was looking for here, and especially after it rolled over and then came back down after setting up for, what could have been a pretty sweet 5-minute RRB, it losing that, I decided not to trade it for a minute, goofed around with RAD for a little bit during this point of time looking at that. And then it came down here, reclaimed, and then it actually broke back up on really high volume. And you could tell the bid was just smashing in, getting to the price. So I went ahead. Now, this is a full-on momentum play. So a trend play would have been a small position here, and then you would have waited for it to go back, make a pullback, and then you would add into your position, kind of like I did for my ad here. But in a trend play, this would have been a small position, and you would have added into it, and you would have grown this account, this position as it went up, right? To eventually getting good profit targets at like pre-market high would have been a great target. So that's how you would play it, more of a trend play, a trend reversal, if you will. But what I was looking for was momentum. Once it didn't hit this previous daily level, it made a new high, and then the heavy volume came in. As soon as it broke this daily level, I went long, and my stop was the same exact price I went into. It was moving up very quickly, and if it came back against me, I wanted nothing to do with it. So as soon as it went through, I went heavy shares on this one, actually risked a full $100 risk on this, which technically wasn't, I could have risked anything at this point because I was going to get out at break even no matter what happened. But I went in pretty nice on the shares, took 600 shares on this one, popped right up. As soon as it popped here, I dropped 10% and 10% real fast into VWAP just to lock me in, make me feel good, and I set to break even, and then we just started tinkering away as it goes. And then using that trend mentality, and if you're a member of BBT and you haven't had a chance to watch Peter, one of our BBT mods, his lightning bolt pattern, I'd recommend checking that video out. But basically, his lightning bolt pattern, you utilize pullbacks to the averages on trending stocks in order to get entries, and I like to use that for doing ads. So as you can see here, it pulled up, it came back into the averages, it made a new high, so I went ahead and added. Adjusted stop loss was the loss of VWAP, moved up nicely partials to pre-market high, came back, made a new high, added in there. This time, adjusted stop loss was the loss of this lower candle, moved up nicely to pre-market, all the way up to here. Partials again held pre-market high, so I did an add, got a partial, and then now we're just kind of hanging out doing that. And since then, ABT has kind of been hanging in this area here. It managed to try and sell it off, but it held and then moved back up to this level and then and it was actually hanging this level here. So I did one more add on it to see if I can take advantage, but I need this thing to get back up to, at least like 96.80 to make this ad worth it. So I'm just holding on right now, seeing how much I can squeeze out of this thing. I think ABT could be really strong into close. So I'm going to hang on to these shares, hoping we get a nice rip at the close, which would be really fun. So anyway, that's my basic overview on partialing strategies. The other thing you can look at to vary that, and I'll just kind of, do this final partial on, is how much you partial and when you partial it. And that is based upon the distance you expect your stock to travel. If you're getting in on a RAD and and for, like I did right here, you're only going to get from 12.17 down to 11. I got about $1 out of that. So there's, we're going to take slightly, bigger shares and take harder, larger partials as we're going down, because I'm not expecting as much move out of this one. But for something like ABT, we can drop 10% shares as we're going up. That way we can take better advantage of this. The idea is to hold enough so that your profit stays good, but not to hold so much that you can't do a good add on a pullback, because you might as well get that profit, lock it in, and then when it comes back, gives you a nice pullback, add into that and extend your trade. That way you can keep your profits safe and you can utilize your unrealized, like a free roll I talk about in some of my other videos, in order to extend your trade and to go up. I like that method a lot better, because if the entire market turns, which this market is crazy volatile right now, if the market turns and heads the other direction, this is going to hedge you a little bit and give you a little money in the bank, and just in case it stops out, and it'll help you deal with commissions and other things like that. So quick 10-minute video on this. I hope everyone finds it useful. I hope you're all having a great day. If you have the time, throw me a like and subscribe, ring that bell, and we'll see you all on next time. As always, keep it green. Thanks.